There's a reason only the top 1% of traders consistently profit in any market condition. They have access to tools that detect something retail traders can't even see: institutional market manipulation. And in this video, I'm going to reveal their most guarded secret indicator, show you the perfect settings for maximum accuracy, and 3 powerful applications that, when used together, create a complete trading system. Let's get into it. First, head over to TradingView and pull up any market you want. I'm using the 15-minute time frame on the euro-dollar, but this works on any chart, any time frame. Then click on Indicators and type in Market Manipulation Index. You're looking for the one that shows MMI, or Composite Manipulation Index. Now, while everyone else is using tools like the RSI and MACD like amateurs, the top 1% traders use these advanced mathematical models to detect when institutions are manipulating the market. And this isn't some basic oscillator either. This is institutional grade market analysis that reveals when smart money is playing games with price. The Market Manipulation Index uses 2 advanced mathematical models to detect this. First, it compares real price movement to natural market rhythm using sine wave analysis. Then, it measures how predictable price action is using regression analysis. So when both models show high deviation, meaning price isn't following natural patterns and can't be predicted, you'll get a high CMI reading. This tells you institutions are actively manipulating the market and retail strategies will fail. Now, just before I show you the best settings for this indicator, if you want to skip wasting time and money testing random indicators and start trading with consistently profitable strategies like this, strategies that are proven and fully automated, which means you can generate profits without even being at the charts, then click the first link in the description below. You'll get access to the exact tools and strategies traders are using to make life-changing profits. Now, let's get your settings right for the best performance. Double-click the indicator to access the settings panel. Then you'll want to set the sine reference period setting to 14. This gives you the perfect balance between sensitivity and noise filtration. And for the final smoothing, set it to 3. This filters out false readings while keeping the indicator responsive to real manipulation events. Now, let me show you 3 ways. The top 1% use this indicator, each one more powerful than the last. Strategy 1 is basic CMI reading. This is your foundation for professional trading. The CMI gives you readings from 0 to 1, and understanding these numbers is critical. A CMI below 0.3 means clean, structured markets. This is when normal trading strategies work. Price follows predictable patterns, trends are reliable, and breakouts are genuine. But a CMI above 0.7 means highly manipulated markets. This is when institutions are actively distorting price. Trends will fail, breakouts will be fake, and stop hunts are happening. Now, a CMI between 0.3 and 0.7 is the caution zone. Market structure is transitional, not clean enough for full risk, but not manipulated enough to avoid completely. Strategy 2 is where it gets really powerful. We're going to add the Supertrend Confluence Signals indicator to create a complete system. To do that, go back to TradingView and search for Supertrend Confluence Signals by Algo Alpha. Now, here's what separates elite traders from everyone else. They never take Supertrend signals when the CMI reads above 0.3. For instance, when the Supertrend shows a bullish signal, but CMI reads 0.6, that's institutions setting a trap. It's a signal that even the perfect breakout will reverse and stop out retail traders. But when Supertrend shows a signal and CMI is below 0.3, that's a clean market where professional strategies work. The confluence of clean market structure plus technical signals gives you institutional level edge. For long trades, you want to see a bullish Supertrend signal combined with a CMI reading below 0.3. For short trades, look for bearish Supertrend signals when the CMI stays under 0.3. And here's a critical exit rule. If the CMI spikes above 0.5 while you're in a trade, close your position immediately because that confirms manipulation has begun. Strategy 3. And my personal favorite is the advanced market regime trading. When the CMI shows readings below 0.3, it shows you're in a clean market environment. This is when you can trade with full confidence using normal position sizes and standard technical analysis. Now, when the CMI reads between 0.3 and 0.7, you're in a transitional zone where market structure is becoming unstable. This is when professionals cut their position sizes in half and require multiple confirmations before entering any trade. Here, the market isn't clean enough for full risk, but it's not manipulated enough to avoid completely. But when the CMI climbs above 0.7, it's a signal you're in a highly manipulated environment where institutions are actively distorting price action. This is when elite traders either stay out completely or flip to contrarian approaches. Because when smart money is playing games, the obvious move is usually the wrong move. Now, manipulation patterns vary, which is why the top 1% traders optimize for different markets. For Forex pairs, set your period to 18 and smoothing to 4. Central banks manipulate Forex differently than other markets, creating longer manipulation cycles that require wider analysis windows. Pay special attention during London and New York overlaps when institutional manipulation is most common. For crypto markets, drop the period to 10 and increase smoothing to 5. Crypto manipulation happens faster, but with more noise, so you need responsive detection with heavy filtering. Also, watch out for manipulation spikes during low volume periods when whales can move markets easily. For stocks, keep period at 14 but increase smoothing to 6. Stock manipulation often involves algorithmic trading that creates specific patterns the CMI can detect, and avoid trading the first and last 30 minutes when institutional algorithms are most active. For futures, set period to 16 and smoothing to 3. Futures manipulation often revolves around settlement periods and economic data releases. While trading with this kind of institutional knowledge is powerful, truth is, even the best indicators need complete systems backing them up. Because the difference between profitable traders and everyone else is, they don't just have good signals. They have automated systems that handle everything: entries, exits, risk management, and market regime detection. So if you want to skip years of trial and error and start with proven institutional